Oh, what's good? Back for a weekly recap. Recapping the week, the 16th of September to the 20th of September. Took 3 trades this week. We're gonna go quickly through this. I don't want to make this like a 30-minute video. I'm gonna quickly just break down these trades relatively easy. I took 3 trades, as I said. Took some buys on Tuesday, as price made a slight correction from the highs where the weekly candle opened. Because we opened the week like around 25.80s, price started to slowly edge it down. Ahead of this, we expected the start of the week to be slow because we had FOMC on Wednesday, so we're going to go through that as well. So we expected it to be a slow week. I didn't even trade one day. I didn't even look at the charts one day. I don't think that much, because I just already had in my mind that I wasn't going to really trade because we were literally sitting at new all-time highs as the new daily, new weekly candle opened. So only then did I start to see some interest in it at the end of Tuesday, where I don't think we had economic data. Let's check real quick. So we had retail sales came out less than previous and less than forecasted as well. So it was bad retail sales. But the month over month actually was my bad. I was looking at excluding autos. The month over month was actually higher than forecasted and lower than previous. So it was right back in the middle. I think it was in the middle of like the min and max forecast as well. So it wasn't really like crazy data, but yeah, price dumped after that. Tapped into like a minor AOI at 25.63. Started to show rejection. Formed a double bottom on the lower time frames in that area. The timing just worked. It made sense to take some buys at 25.63s to go back towards the highs as we're in a bullish trend. Was a kind of risky trade to take ahead of the FOMC. The smart thing to do was just to wait until FOMC was over and the next daily candle opens, and you'll see in the next trade that was where the real good trade happened. This was like the only good trade this week, realistically. You could have skipped Tuesday, and because this was a risky trade, and it wasn't really that worth it, although it did make sense, and you could have still had the same risk parameters that I would have used. So it was a valid trade. It just wasn't a high probability trade, I'll be honest. Because retail sales was made and it wasn't really going to hold anything weight, it wasn't going to hold more weight than FOMC, so we knew FOMC was the real focus. And then that's when we had this huge whipsaw to new all-time highs initially with the 50 basis point rate cut that we were expecting ahead of FOMC. We were actually expecting like 25, but got like a surprise 50. I've been seeing a lot on social media. It's apparently historical. The last time they did this, there was like a crash or something back in like, I don't know, 2007 or 2008 or something. So yeah, don't know I don't believe a crash is going to come at least like that. I think we're going to see pretty relative normal price action from now on. But yeah, that was the rate cut that we have been pricing in since October 2022. So yeah, gold has been extremely bullish since that date. And yeah, so we took some nice buys when price dumped into a minor AOI area at 25.55s, and price closed back above 25.55s again after, well, it was literally at the daily close that happened. So this was like a high time frame wick basically. And then after that, price did not dip below 25.50s at all when we got into the new daily candle. So that was very good. We had the minor pullback, you can say, from the bullish trend, from the highs at the start of the week, which made sense. And then basically after FMC, we got prime buying points at 25.50s, or even if you were risky, you could have got in a limit order at like 25.50s, but I got in at 25.55 and had my stop at 25.50s because we didn't actually touch 25.50s after the daily candle close on FOMC. So yeah, that was some nice buys to ride into the all-time highs. I unfortunately closed around 25.71, so I did not get all those runners, I'll be totally honest. But yeah, this was the prime entry of the week. You really just had to take this trade if you were looking for entries this week. This was the trade to take on gold. So yeah, right after the dust settles on FOMC, because a lot of people like to trade this. It's just like, why? I just like, that was almost guaranteed to happen. That there was going to be a huge rejection one way or the other. Like, and it's just like, why trade that? Makes no sense. You wait until the dust settles. Wait until the market can actually absorb what has been said in FOMC and what has actually happened. Because in the heat of it, it's like things change. Things are changed like seconds. So it's better to have the press conference over, done with, new daily candle open, and then you can start looking for better setups. Because it's like because with experience now with how many FOMCs I've seen, I just knew that price was just going to be better after FOMC since the start of the week. I knew that after Wednesday, New York session, everything's going to be good, and so it was. But I took a very risky trade, counter trend trade on Thursday, because we had optimistic data. I believe it was jobs data. We got a surprise result, I think, for jobless claims. Yeah, as we can see, we had the 55 basis points cut, but we were expecting a cut this meeting. And then the next day, on Thursday, New York session, where we were at the 25.90s area AOI, we were floating around there. We had some optimistic jobs data, with coming in lower than previous and lower than anticipated. And I believe this was lower than the minimum as well. So yeah, but it, as you can see, it didn't really hold that much effect. It made this pullback, retested the highs again, didn't actually break it during this daily candle, and started to like form kind of an intraday double top, and that's why I took this sell. Although it did happen like late in the day, so I was a little bit iffy about taking this, and the fact that we're in a bullish trend and we just had huge dovish signals from FOMC. But I was expecting like a more buy the rumor, sell the news play with the cut, because it's been priced in for so long, and now we finally got the cut. The cut was priced in for a year and a half, and now we just got it. So I didn't expect to be like huge bullish impact, like at least like the initial parts of the cut actually being absorbed into them, like it being a reality. But yeah, price still took off bullish after the minor bearish dump that we had during the press conference. And once the press conference was over, new daily candle, price took off. But yeah, this was a risky counter trend trade. Had I still been holding this trade extending into all-time highs, which is what I should have done with this this buy trade. That's why I'm saying it literally was the only trade to take. Gold buys at 25.55s around 10 p.m. Eastern on Wednesday would have been perfect. Like, just ride them straight into the all-time highs, because that's where the daily candle closed at around 26.25s really. Oh yeah, that's where the new all-time highs. So yeah, the sells were a bit shit. Even the buys on Tuesday were a bit shit, I'm going to be honest. Those are like kind of lessons, like learning trades, like especially this one. But yeah, 2 wins, 1 loss. Yeah, but I really should have only just took this trade.